Hi, I'm Dan Noone. I'm the CEO of G2 Goldfields. We trade on the Toronto Stock Exchange venture under the symbol GTWO and on the OTCQX under the symbol GUYGF. We have a high-grade discovery in Guyana. Previously, we have put out a resource of 1.2 million ounces at about 9 grams a tonne. We've been drilling for 18 months since then, and we've been recently hitting a lot of high-grade mineralisation. So as we move forward from here, we plan to have another MRE out, hopefully either by the end of this year or early next year.
Dan, welcome back on the show. Yes, this company is starting to look very different from the one I last spoke to you about. These grades are exceptional. I mean, one, were you aware of them, or how did you go about actually identifying where to go and drill for them?
Well, originally we were drilling and we were hitting high grade, but hitting low grade in between. And then we decided we needed to figure out exactly what the controls on that high grade were. To that end, we got Brett Davis out from Australia, a structural expert, to help us get to that final leap in our understanding about where this high grade was, what was controlling its emplacement. And so we did that over the summer. We come up with a model of where these upflow zones were, where we're hitting the plus ounce material, and we designed a program to go back and drill those. And to that end, we've been hitting the high grade on shear 5, on shear 3 in the Oko Main Zone, at the Ghanie Central Zone as well. And now this morning we put out the discovery at Ghanie South, which is 11 metres at 37.5 grams. So the team's getting very good at targeting geologically where this high-grade mineralisation is, and we will continue to target that aggressively as we move forward.
Well, I think that's the point. Looking at what seems to be available to you on your balance sheet, well, not just your balance sheet, in your bank, you've got cash to actually get after this stuff strong and hard. So tell us about these shears and sort of how they fall, and also what you now know you need to target.
Okay, so originally we were under the impression that the gold and the quartz veins were co-equal, came in at the same time. With the work we did with Brett, we found that the 3 deformations which prepared the rocks were actually pre-gold mineralisation. So that gold came in right at the end of the last phase of shearing. It's come up the main shear, but also along lineations, which are the intersection of the main shear and other foliations. And so we have three distinct ore shoot orientations, one at 45 degrees to the northeast, one at 65 degrees to the northeast, which is at the Ghanie Central and Ghanie South. We also have a shallow plunge to the southeast where we get mineralisation bleeding off those high-grade zones, which is generally a bit lower, but still relatively high-grade.
Right, and so talk to me about size and scale of this thing. Obviously, so how deep are we? How long do these shears run?
Well, the shear zone at Ghanie is 1.2 kilometres long, and at Oko is 900 metres long to date. Originally, the resource was down to 350 metres at Oko Main Zone only. We're down about 450 now with the assays. With our drilling, current holes we're drilling will be down about 500. At Ghanie was only down about 300 to date, and at Ghanie South down about 200. So still relatively shallow. We just brought in some bigger rigs to enable us to drill deeper on all those areas. Whilst we also use the shallow rigs to drill along the zone to the north of the Oko Main Zone, where we think it's been displaced out to the west, and hopefully we can find another trend along there.
Right, so currently, for this conversation, you're saying about 1.2 million ounces, right? Of I think most people consider high grade. These ounces, these grades change perhaps the outlook for the company. And I know you're talking about rushing into another resource, end of this year, beginning of next. What is that picture that you think you need to paint in terms of when you put it out, what you put out, given the excitement, I guess, of these super high grades right now?
Well, I think most districts that start out with really high grade mineralisation, and you have some kelp building through to Gosawong in Indonesia, to Porga in Papua New Guinea, needed that high grade zone to pay back. And so what we're seeing here, certainly at the Oko Main Zone and now at Ghanie, is got near surface zones which are running between 20 to 30 grams a tonne. That obviously to be the target of the early stage mine design, so you can get a low capex and rapid payback. So for us, it changes the whole economics for current shareholders. You're not looking at a ton of dilution in front of you, and it adds the value to anyone who wants to buy it, that they're not waiting 10 years out to get their payback. They can look at it and say, okay, we can buy this, we can permit it quickly because we're in Guyana, and we can build it for low capex and get paid back quickly. And when you work that number back, they can pay us more if that's the route we take.
Right. So I need to get a bit of information because I want to be able to go away and try and do some numbers here. Okay. So how many meters have been done on these shears? How many more meters will be drilled? And over, this side of Christmas, how much have you allocated?
We've probably drilled about 50,000 meters now. Between now and Christmas, we'll probably get about another 10,000 hours, I think. That's just basically as fast as we can go with what we have.
Right.
We'll be adding another rig, fourth rig. We still like to have one rig doing exploration as well. That's where we find the Ghanie Souths and whatever else. But yeah, with it, we can probably get another 10,000 meters out at the top end between now and Christmas.
Right. Okay. Because I think that the question people are going to be asking themselves is, does this? It's not necessarily a new discovery per se, but do these new higher grade ounces start to change your thinking, or what would it need to look like to kind of change your thinking? Because I think you've had every time you're interviewed, it's like, when are you going to merge with your neighbor? That would make the most economic sense. There gets a point with some of this drilling and some of these ounces where you're like, well, actually, this is a pretty darn good standalone project now. So are you going to leave that thinking till the end of the year until you actually know what's coming out of the ground? But assuming it's more of the same, what would you do?
Yeah, I think so. I mean, I think we've thought for a while now that it is a standalone project. I mean, they're right next to each other. Would someone think they'd logically be better together? Well, yeah, of course. But then you have to get the right ratios and all that. So I think, we'll sit down, we'll do an internal mine design. We've got an engineer doing that, and we'll come up with a number which we think the value is. We'll also, look at, how you would mine it. And then generally, like I say, the high grade in these districts get mines first. So that's the real value. And, you look at it and say, well, and within the output, when we look, any potential buyer can look at it and say, well, I can make that much money out of that. I'll pay that for it. And so whether you had to, I don't think you have to merge with the union, but is that a possibility? It always is. But I think as a standalone asset, absolutely, this is fantastic. And I told people, when I was at Newcrest, we found Gosselong, and it was we got to 1 million ounces at an ounce, and the engineers just said, stand back. It ended up being 5 million ounces, but they built it at 1 million ounces. And so that's what a mining company would do. I think a mining company, if they had what we have now, would start going full steam ahead into production.
It's interesting times, Dan. Well, look, I guess we'll keep this short and sweet. The good news, lots more ounces being found, super high grade, obviously. Getting a new resource out would be great. And in terms of timing for maybe trying to put some numbers around it, some economics around it, is that in the near future?
We tend to think that there's no point doing a PEA until you've really figured out the size of your asset. Internally, we always do, because you have to have that discipline. Where's the value getting added? Where should we be spending our dollars? But with that, we have to keep that internal. We won't be doing a PEA at all.
Okay, good man. Dan, good to speak to you. See you soon.
Okay, thanks very much.